everyone. Today we are going to talk about an important change introduced by Central Bank of Sri Lanka. That is, introducing a single overnight policy rate or OPR. This will sound technical, but don't worry, by the end of this video you will understand what is OPR, why this is happening, and what will be the impact on us. Let's start with basics. Overnight policy rate or OPR will be the main interest rate going forward for central bank. It's the rate at which commercial banks can borrow money and deposit money with central bank. Think of it as an anchor for the economy in deciding short-term interest rates. When OPR changes, it affects the interest rates we pay for our loans and the interest rates we receive from our deposits. Say for an example, a higher OPR makes borrowings more expensive, which slows down the spendings and keeps the inflation under control. On the other hand, a lower OPR makes borrowings cheaper and encourages spendings and improve the economic activities. Previously, Sri Lanka had two policy interest rates. First one is standing deposit facility rate for deposits and standing lending facility rates for loans. While this system worked, central bank thought it is less effective in passing the signals to the economy. Therefore, they decided to move on to the single OPR to simplify its monetary policy. This change is not just unique change to Sri Lanka. This follows global best practices used by advanced economies like Canada, UK, and European countries. In this new system, there are several advantages. As I mentioned before, there will be a clear communication of central bank's goals, and it will help central bank to influence interest rates across the economy more effectively through average weighted call money market rates. It gives businesses, investors, and consumers a clear signal about where the economy is heading. Let's see the practical side of it. In practice, OPR acts as the benchmark for overnight transactions between banks. This rate shapes how banks decide lending and deposit rates. That will create ripple effect on overall economy. Say for an example, if I want to borrow some money from bank to start my business, a lower OPR could mean a lower interest rates, which will be a good news for my business. On the flip side, if I want to open an FD for my future plans, a higher OPR might lead to better returns on my savings. To ensure the OPR effectively guides the market, central bank will use tools such as open market operations to manage the liquidity in the banking system and keep the market rates aligned with the OPR. So, what is the big picture? A single OPR makes monetary policy more simpler and more effective. It supports economic growth by providing stable environment for businesses and individuals. And it aligns Sri Lanka with global best practices, which will boost the confidence over our financial system. So this shift to single overnight policy rate is not just about numbers. It will be a step forward toward a modern, transparent, and efficient economy.